Okay. All right. Welcome back in here, everybody. Hopefully, you had a fantastic weekend. This is the Prospero.ai stock market live stream. Let's take a live look at the markets as we are opening up today. It was red across the board to start this morning. The SPY was going or is going for still 10 straight green days. Uh, we've had a lot of green recently, but right now QQQ and SPY are still red, as well as the Russell. The Dow Jones is actually in the green now, so looks like things are kind of drifting higher throughout the day. We've had very good bullish readings in the Prospero, QQQ, and net option sentiment readings recently, popping over 50 a lot of the recent days. So let's take a live look to see where we're at now. I see SPY still at 49, so remaining strong, and QQQ is at 45, although I did see it dip into the 20s earlier today. So maybe a little bit of a warning there for tech, but both looking above the bull line now. As everybody's tuning into the stream, make sure to hit that like button if you're excited for the topics that we're going to get into today. A lot to cover. And yeah, I'll take you through some of them right now. So, as I said, SPY going for 10 straight green days. I want George's reaction to the activity we've seen in the market, this bullish move higher. Has it run its course or can it continue? And now that we've gotten a bulk of the mega cap tech earnings, how are we feeling about the overall market? We still have a lot more earnings to come, though. Some very, very interesting companies are going to report this week, like Palantir, AMD, SMCI, many more, AppLovin and Coinbase, SoundHound. So we'll take you through some of the earnings that are yet to come, how we're feeling about those companies in the current state of the market. Then, probably the number one story to happen in the finance and business world over the weekend, Warren Buffett announced that he is set to retire as CEO of Berkshire Hathaway. In honor of Buffett, Berkshire stock. All right, I'm switching to my headphones. Hello, hello. That should sound bad quality. All right, I'm switching back to the mic. Any sound now? You got it now? Hello, hello. What is going on? Is there sound? Can't hear you again? What the heck? Gone again? Yes, that works. Is it is it back now? I'm playing musical chairs with the microphone today. All right, Jill said that works, so I'm guessing you can hear me. Good. Okay, I'm not going to touch anything. I'm not going to move. We're just going to go from here. Okay, did you hear me talking about Buffett at all, or where'd you lose me? The stocks we were going to cover this week for earnings. Um, I don't know where to pick back up. If you can let me know in the chat, I'll start where you guys lost me. So glad. Wow. There's a lot more people in here than I thought. I see a bunch of different names. Shout out to Jomar, Jill, Kyle, the Ernest, Johnny, Kyle. Did I already say Kyle? Up to Buffett, start of Buffett. All right, so yeah, we're just going to cover the Buffett career, him stepping down from Berkshire, the stocks reaction, cover all of those stuff, and then I have an amazing stat to give of Buffett's performance between 1965 and 2023. So we'll have like two different segments of the Buffett topic, but shout out to Buffett, such a legend, and sad to see him go. And I think Berkshire investors are as well because the stock was down today. Hey George, welcome to the stream. Then we're going to get into GTA 6, which had another delay announced for Take-Two stock. What it means for the company, they've now been working on it for over a decade. And actually, another insane stat comparing GTA and its development to the building of the biggest building in the world, the Burj Khalifa, which is kind of shocking. So stick around for that. A couple more stories we have. NVIDIA considering adding Bitcoin to the balance sheet, and we've had so many bullish signals in Prospero for like MSTR, Coinbase, and other crypto-related companies recently. So it seems like the crypto space is kind of where it's at right now. What does it mean for NVIDIA and the crypto world? Then building upon, if you guys were in our streams last week, the Snapchat story we covered and how George thought they would be a company that would get acquired for below their share price. We have maybe one of the more boring companies in the market right now, Skechers, famous for the dad shoe, getting acquired for a 30% premium, $63 per share. The stock was up 25% today, so I thought it was kind of funny to see Skechers up so much after we covered Snapchat last week. And then we have some macro stuff to get into. We have the FOMC meeting happening this Wednesday. What do we expect them to do? How will it affect the market this week? And then we have OPEC Plus announcing increased oil production. And I want to ask George about the lessening of global friction that will have and energy prices lowering, if it's going to be enough to combat the friction we're getting from global trade and tariffs and whatnot. But we have to start today with what we're seeing in the market. Everything was opening red today, George, but it looks like things are kind of drifting higher right now, fighting to go green. The Dow has gone green officially. SPY and QQQ are still red, but in Prospero, in net options for SPY and QQQ, we are seeing right now SPY at 46 and QQQ at 41. So how are you feeling after a weekend to mull over all of the stuff that happened last week, all the earnings? How are you feeling about the overall markets today?
Well, QQQ it was a little weaker this morning, I saw. I had seen it like I think as low as like 25, maybe a little lower. That had me, concerned that the rally might be losing some steam. But yeah, I mean, it's I think we're in surprisingly good shape. Like I think the scary thing and what makes this so difficult is what we've been saying. It's just like I think people are feeling better about the potential positive outcomes, and that's what we talked about in our letter. Now that we've seen and actually just to review something, I was very nervous about the GDP down 3.3%, especially versus the estimate of up 0.3%. That's a pretty big miss, and the market initially reacted pretty terribly to it, but it recovered, and I think it recovered because of some other data that we later figured out, which was basically that 5% of the impact of GDP was from trade, and it was negative 5%, and I think the highest number before that was negative 2, or sorry, the lowest number before that was negative 2.5. I believe that was during the pandemic. So that's pretty unprecedented, and just a little more color on why that is, and why it is an outlier. Just because so many people nervous about the tariffs were basically importing a lot more goods than they otherwise would have, and that ultimately reduces the amount that could be spent on domestic goods, right? It's like, it's kind of like looking at it like a household, right? If you end up spending, more money on, let's just say, because a lot of it was electronics, right? If you bought a TV and a phone this month, like that's less money to buy other things that you would typically buy. So that's what we saw, and that actually made sense. And in that context, the GDP number was actually surprisingly strong. So that's a big reversal of that context. So I think we're starting to see people say, well, actually, like, it's kind of what we've been saying, that like we haven't really seen a major impact yet. And the very strong jobs number that beat upwards, kind of added to that story, where it's just like, okay, like there's a lot of worry, a lot of consumer confidence worry still, but I think we've yet to see it really impact. And I do think that's coming. Obviously, I do think an impact is coming, but you have to keep in mind how these models work, right? You start at a certain point, and then the decline happens from that point. So if the numbers are stronger, it basically raises all of the model outcomes, even the ones that are predicting problems going forward. So I think that's what we saw, and I think what we're seeing in terms of the upside now is people basically saying, "Oh, if we do solve things with China, then all of this didn't really have a huge impact yet, right?" And the yet is the important part of it. So yeah, I think we're starting to see like, Wall Street models, people just basically be like, okay, we have to model in the possibility of not just this downside, we have to model in more possibilities of maybe it isn't this huge impact, maybe we're not going to get a recession if we ultimately are able to make a deal. I'd say especially with China. So that's what I'm looking at right now. The challenging thing, and where I started before I was like, oh, I actually have to give a lot more background. The challenging thing is what we've been saying, which is that, we don't know when it's going to impact, because it honestly can be very like when the tariffs go into effect, when that starts to affect certain shipments. All of that is like, this is pretty unprecedented, and also a little confusing to follow all the things like, the certain electronics are exempt, but maybe there's going to be a semiconductor thing. And that's just one example. Maybe there's going to be a car maker exemption, right? It's already a complicated macroeconomic situation without all of the exceptions, potential exceptions. So it becomes a very, very difficult thing to model. But the other part that we also kind of talk about is difficult is the fact that it's just like there's a time component to this. I think there could be some optimism. The market reacted positively to China saying it was like considering opening talks, right? So it's one of those things that these are viewed positively, but the longer we continue to go without a deal, the more kind of decay of that positivity there's going to be. So yes, still a very, very difficult situation, especially if something like China comes out and says we're actually screw that, we're not even going to consider this, we're not open to talks. Like, I think there's a lot of gamesmanship going on both sides right now, which what makes this a tough market on an ongoing basis. So yeah, we are and have been for I think like a week or two now, more bullish than bearish. I think at least 2 weeks, because that's what net option sentiment has dictated. But as we did last week, which we kind of said in our letter was a bit of an overreaction. When we saw the negative reaction to GDP, we were even long short again. But kicking myself a little for getting out of VRT, which I did that morning when it was down like 5%, which was near the bottom, and it went on a nice run over the next few days. But that is all to say, I don't regret that, and I will continue to be very cautious on these events, because my I'd say our results, we're about 77% up on the market, 78, I think. Great results, right? There was a definite drag because a number of times during this, like, what I guess I'm calling on an ongoing basis tariff kerfuffle. I saw stocks start out like down, 5%, 8%, something like that. And typically I'm just like, when I see that, I'm just like, I'm gonna hold, because there's so many days where you get out of a stock, it's down 8% and it finishes, down 3% because, the market corrects itself a little bit. But in this tariff situation, there were many times when I saw that and was like, oh, maybe it'll rebound. And then, two blinks of an eye later, that same stock was down 15%. Or, I even had one go down 20% in a day, which is just like crazy for non-earnings, right? Well, I guess Restoration Hardware had earnings, but I think it was down like 65%, not like the day it had earnings. It was fucking crazy. But yes, I think that um I think that I will continue to do that, because we never, like, much like if you see the market starting to rise a little bit and you're just like, oh, like maybe there's good news coming, that's how seriously I take it too. Like, the market starts to go a direction like pretty strongly, I'm going to respect that direction more than I have in the past, just because uh I've kind of seen like the circuit breakers go off this year too many times, and you just can't get, yeah, I don't want to get caught in that. And um I think that's one thing where, my approach and anyone who's managing funds might differ a little bit from what I'd recommend for anyone, right? Like, I'm managing returns. I think of it on a year to year basis, right? Because we're judged on our yearly returns. So when I'm at a point like this where I have, and this has happened in, many years, where where I have some great returns and there's volatility, right? I don't mind just kind of like, making very risk controlled decisions to do that. But I would actually say the only difference is I feel, everyday people that aren't managing, a portfolio, like, or, having, public returns or anything like that. I think that should be your behavior all the time, right? At the beginning of the year, I actually take more risk to make sure I get those good returns. And that's actually an interesting. I think I've said this on um as my favorite game theory problem. And it's really something that anyone should think about as a retail investor, which is that people make the same mistake in blackjack as they do in retail investing. I see it all the time, which is that when you start, and it's bad game theory, where it's like when you start winning, when people start winning, they start betting or, making bigger bets. And that's the same thing. That's actually the way you get yourself back to zero, right? The game theory, and it's what I use all the time, when people say sometimes like 4x, 8x, see me do those kinds of things. I did, like, I think an 8x MSTR in the investing portfolio for the first time this year. The game theory actually says it's reversed, and it's actually easy to understand in blackjack. If you keep doubling your bet, if you're losing, you will get back to zero. Like, those are known odds and you'll get back to zero, right? It's a similar thing in investing. And I'm not advocating for that. I'm actually advocating that people should manage risk all the time and not get themselves into a hole. But, like, and the reason I'm comfortable doing this and I wouldn't recommend it is because you have to be able to remove your emotions from things, especially with stocks, right? Because it's not the same as blackjack, where the odds. You actually have no idea what the odds are in the stock market, and you have to, like, do a good job of calculating. But I will do more of that, where at the beginning of the year, I will bet bigger to make sure that I get my gains. But now I will manage risk. But that is all to say, and I talk about this especially in my newsletter last year, I think there was like 4 months last year that were just like blown out of the water, and the rest of them were closer to neutral, smaller gains, that kind of thing. Because I felt I had a good read on the market, and that's when I made my big bets. That's all to say, I don't think myself or anyone has a good read on the market right now. So it's a very, very good time to just be cautious. And if you see those gains, clip the gains. If you see the losses, clip the losses. Um, the things that I have held for longer this year are things that I'm just like very, very confident. And I actually haven't held anything for that long with all the volatility. So yeah, a lot of what I'm doing on that note um, is uh, is just managing risk actively, making sure that I'm in the best thing that the signals are pointing to in any given moment. All of that is the really vital way to manage risk.
And even heading into today, where we're slightly red, the SPY was up for 9 straight days in a row in the green, which it hadn't done since 2004. And if today finishes green, it would be the 10th straight day, and it has not done that since 1996. So if you're someone that kind of was nervous and maybe got a little too hedged at the bottom and missed the rally, um, what would you tell them at a time right now when the market has popped? Is it the time to kind of start going back in, or do we expect a little give back of this rally with the SPY having gone up kind of unabated 9 straight days? I think you'd kind of expect a little bit. And like the term you've been using recently of decay, I feel like is a very interesting way to put it, where like there's so much uncertainty. Like usually the market kind of melts up over time, but it almost feels like it's going to reverse that if there's no clarity in the current environment.
Yeah. I think that's a good way to put it in kind of like simple terms. That yes, um, I think what we're basically seeing is the market needing good news to sustain a bull rally is the way to say it. But it really, really depends on your strategy, right? If you are comfortable like changing your positions quickly, or you're comfortable shorting, or you're comfortable like using inverse ETFs as a hedge, and putting your foot on that gas pedal quickly if you have to, then yeah, anytime I'd say is a good time to play a market direction. Right, we're having a great bull direction right here, and one thing that I tell people all the time, and I can't tell enough, is the single most reliable signal of if the market is going to go up is it has gone up. Looking at like a 52-week, history. Um, Green points to green, red points to red. Obviously, that's not perfect. No signal is perfect, but that's sometimes simplest is easiest to understand, right? So we're in a good run. I think that's one of the things. The market started out a little red. I think it was like a bit of a bear test, and it rebounded just because there's a lot of positive momentum in the market right now. But no, now is not the time. Not now is not the time to feel like warm and fuzzy and cozy. It is definitely and put in set it and forget it investments. Um, but that being said, I don't think we're going to see that kind of thing for a while. So I would recommend, like what I always say is like whether it's, creating a smaller, more risk on, more trading portfolio in the traditional sense of how that's used, or just paper trading. Now's the time to get yourself comfortable with that strategy, because it's just I don't think we're in a good time to buy and hold. We could be in a good time for it, right? If everything goes right. But as we're kind of talking about, like a buy and hold strategy right now is a bet on China and the US figuring this out. And that's just something that I don't feel comfortable betting on. I mean, I'd actually lean more towards not figuring it out right now than figuring it out. But that kind of encapsulates what we're talking about here, right? Because I think I would wager a lot of the institutions that are currently riding and driving this bull run also would agree and say they'd probably bet more on no deal than deal. I mean, like that's just a wager. I don't like that's not from any kind of like reliable survey of institutional people that I know. But that's really what we're talking about, right? The difference between a trade and an investment, right? I think there's a good bull trade right now. I do not think there is a good bull investment right now.
So I want to start going through some of the companies that are going to report this week, and we'll start with Palantir. But for everybody who's listening, I'm just going to read through a list of companies because I don't think we could get to all of them. But if any of them really pique your interest, comment them in our chat, and we'll make sure to highlight them at least when we go throughout these. So companies set to report this week: Palantir, Hims and Hers, AMD, SMCI, Uber, Disney, AppLovin, Shopify, Coinbase, Cloudflare, and our favorite SoundHound. So let's start with Palantir. Pretty insane stock, trading all the way back up near the all-time highs. If you were someone who all you had invested in Palantir this year and you just had been in a coma, skipped the tariff tantrum, you'd be up 62% year to date, which is just insane to think about. But how are you feeling about this stock? I know our signals really like it heading into earnings today with it trading up near all-time highs.
Yeah, I mean, it is interesting, right? There's a lot to comment on there. I'm going to start with Palantir because I'm going to start with Palantir because I think I'm going to hold it through earnings, which is kind of crazy because I mean, those that watch this know that I'm always trying to game theory things. And a company that has risen like Palantir has and like trading at the crazy value multiple it has, like generally you'd think there is a lot more to lose than win in that. But I mean, we mentioned some of the contracts they've started to get. Like I think with the alignment of Vance is obviously very kind of like brought up by Teal into all of this and both like Teal obviously I don't know he's a founder or a funder of Palantir. I mean he's very highly associated with Palantir. I just have like a hard like I think their business is growing. They've done very well with earnings beats recently. And even if they do underwhelming numbers, I just have a hard time believing that they're not going to be announcing some very exciting things in their pipeline, whether it be the US or other places. Now, the only risk that I see, I don't know how much of Palantir's business, actually, this is probably a good Google. How much of Palantir's business is international? $27.5% international. But this is the thing about Palantir's business that I think makes them even like once you are a Palantir customer and they're in your data sets, they're deriving insights. I mean, one of the things I think Palantir offers, right, is unifying these different, data sets that they already have access to derive better insights, right? So even if it's not the same thing as like buying a car, right? Where you could say, I don't want to buy a Tesla. I'll just buy one of the other EVs, right? There's not necessarily a lot of, even if there's comparable capabilities, the kind of insights they can extract from, doing the kind of work they do with compiling data sets and the data sets they've like put together for their other projects, like an AI startup just doesn't have that kind of entrenched data that they've been building for a long time, especially the time series history component of it. It's kind of hard to just be like, well, I don't really like the politics, so I'm not going to use, Palantir anymore if the product's working for you already. Now, that might change their new business a little bit, but as we're saying, like, I think there's so much I think it was like they just was it NAFTA that just gave them that big like security contract or whatever. Anyway, I think the other thing about it is that their business is not really it's not subject to the same like downturn things like security NATO. Yeah, NAFTA didn't sound right. The big security is not something that gets cut back on in the same way that other things do. So yeah, that is all to say. I'm holding. I'm like as I'm talking through this, part of me is kind of thinking like, oh, maybe maybe I'll oh, what do we have? What do we have here from the Earnests? Yeah, yeah, that's what I was saying. But well put, Earnests. So looking at another business, right? I was actually thinking about double it, like doing it, like getting another Palantir position, but I almost never bet on earnings like that in the investing portfolio, so I probably won't. But when I think of a business like AppLovin, like I think Meta, like the way Meta handled it, like sometimes you have your forecasts where you're like, okay, AppLovin's maybe like, okay, like we're a little more bit more nervous on tariffs, like blah blah. But when Meta, like a very ads driven business, already led the way and said, you know, we're not like necessarily worried about tariffs or the economic impact or anything, it's kind of hard for AppLovin to get up there and say like, well, we are worried, like because there's some friction in that, right? Because like let's say that AppLovin's right and there is trouble coming and Meta's wrong and they're just like they're trying to gloss over it for countless reasons. Um, it makes you as AppLovin, it makes your business look weaker if you say, oh, we foresee problems that Meta doesn't foresee, right? So they almost have to like offer similar like guidance to what Meta did, like of the non-worrying variety. So that kind of like, especially like AppLovin, they've had such positive responses to earnings. And I think what I'll do if Palantir goes well today, I will probably get AppLovin. Wait, when does AppLovin report?
AppLovin is Wednesday.
Yeah, I think if Palantir goes well, I'll probably get into AppLovin um to uh to play with some house money. And I think I might get out of Palantir. Like I think what we could see is great earnings. It'll run, maybe even like as much as 20% after the earnings. And then I think I want to get out, right? Because if there is bad news, like with a stock that's run like Palantir, that's the kind of stock that can go down 30% in a few days, especially if it just ran 20%. So I think that's my official plan for this week because I think I talked myself into, AppLovin's earnings being a pretty positive event. Um, so yeah, hopefully Palantir goes well. I got some house money to play with and we'll let it ride on AppLovin.
No interest in Coinbase. I remember just a few months back they were one of the better looking stocks, but it seems like things have kind of flipped to MSTR more so than Coinbase.
I mean, I saw Coinbase. I check on it periodically. I saw it net option sentiment at 50. Um, and yeah, I don't really, that kind of turned me off to the whole like even if MSTR looked good, um, I kind of
Coinbase
need both
looks
of those to look good
yeah,
if I'm gonna like trust what's going on.
85 upside, 98 net options right now. I'm seeing.
Coinbase?
Yeah.
Wow, it's a strong recovery. Boy,
They don't
I
report
want to
till
check on
Thursday though.
MSTR. MSTR is always looking pretty good these days. Um, yeah, it's one of those things that like those stocks are never my first choice. Like just because of the non-transparent leverage in cryptocurrency. That makes me very uncomfortable. Um, so I only really get into those if it's just like staring me in the face. Like if they're both at like 100 net option sentiment or close to it, which they might be. Oh, thanks, Jill. Yeah, too much weakness. Um, too much weakness for me. Um, I think that uh I basically have to see that like a lot more strength. And like I just don't want to own that much like I was talking about. I don't want to own even Palantir and AppLovin at the same time. I'm kind of only exposing myself to one, high growth tech stock at any given time, and that would be my recommendation. And I would put that. And so I wouldn't, unless I see even more strength, but even then I don't know. I wouldn't want to own MSTR and AppLovin and Palantir, or even two of three of those. Um, I really want to spread things out a little more. And like the perfect example, like one thing that I always tell people in terms of how to become better is like you always want to have an investment thesis and or just like more simply a reason for doing something, and being right for the correct reasons, right as in the stock going up, is so much more important than just the stock going up. And I'll give you an example of how I think about that today, right? I was considering, adding more risk to the portfolio, maybe getting a second tech stock, or even having a consumer like, or even like holding on to Ulta Beauty or whatever. But basically, the reason I ended up with Deckers Outdoor was because we're doing a value metric, basically how close to the 52-week high something is, and Ulta was in the 14th percentile. On that. So penalized for it, or sorry, that could be considered the 86th percentile in terms of being closest to it. But Decker's was 50. So I had much more confidence that it had reason to move up. And like I put a lot of those in the same risk category. Like right now, growth stocks, consumer cyclical stocks, or consumer cyclical growth stocks, those are the ones that if there's tariff worries are going to get hit the hardest. So I do not want to, overload, but I'm even diversifying in very nuanced ways, and that went well. Like, and I even said it in the letter. I said I think Deckers has more room to go up due to the fact that it's farther away from its 52-week high than some of the other stocks I'm looking at, and will have more of a shield downwards. Sure enough, Deckers did well today. And like that is how you get better as an investor or trader. Like no ifs, ands, or buts. Don't I don't care. Like I don't care if I don't put much thought into something and I'm just like acting more on instinct and it goes up, right? That's fine. I'm happy to take the win. But like the real things that I'm always trying to reinforce is if I can logic my way through why something is better or worse and I'm right about that, that is the way you grow.
The only other company on the list I definitely want to hit is Cloudflare, just because I've seen it on our short-term bull list so often recently. I just pulled it up in Prospero. Let me see again. It still has 81 upside, 93 net option sentiment. I'm wondering, I guess a lot of what you're saying about like not wanting high growth or a lot of high growth tech stocks in the portfolio at the same time, I would assume that would apply to them. But maybe Palantir earnings will be a read. I mean, they're not exactly the same, but cybersecurity versus Palantir's AI defense, similar in a sense. So, are you going to get any read there for Cloudflare, or how do you feel about the company on its own?
Says, this is basically what we were talking about when we were talking about risk management, right? And what I recommend for risk management. Like essentially what we're talking about is like, and I was like, well, I'm quick to sub things out. I'm taking only the best. Like, yeah, Cloudflare is something I would very easily have in my portfolio if I was taking on more risk. If this was a typical year, something like that would be like, sure, throw it in with a couple other tech stocks. Like I might say, okay, I'll take 3 and make sure I have 1 short and call it a day. Right now, I have 1 long, 1 short tech stock, and I had to make sure that like that short tech stock was kind of larger cap. I'm just being very, very cautious. So yeah, I mean, what I wouldn't say is like, oh, like you should get Palantir because that's the best overall picture. Like what I always say about people is that like, yeah, if you have a stronger feeling on Cloudflare for whatever reasons you might have, like go for that. But I would just be selective and not have too many, of these high risk stocks. If you're having like, if you have like, 20% of your portfolio in SQQQ, go crazy, right? Like that's one way in this market you could potentially win. I mean, you better be right, right? You could have like Palantir, AppLovin, Cloudflare, bunch of others making up 80% of your portfolio and 20% in SQQQ. You better be right that those are going to win more than the general tech market. But that's the kind of like risk adjusted like strategy that you can pursue in this market, especially if you have a lot of confidence around earnings. That could work and that could protect your downside. But I always like simpler portfolios than that. And that's why I'm just keeping my portfolio very simple right now. I'm trying not to overcommit to sectors, market caps, even types. I don't want a bunch of stocks near their 52-week high, which typically, like, as I also said in this, typically a good last 52 weeks is a huge predictor of a good next 52 weeks. But no, not in this market. I've seen so many stocks that have done super well get hit seemingly only for that reason, that they've done well and that the market just views, growth and priced in growth as something that is going to get like penalized. And like what we always talk about, that doesn't even necessarily mean that the market doesn't like those businesses. It could just mean they see weakness in the buying power and they're just going to short it as much as they can because they think the short will perform because they see others in that short. And then they'll just, get in when the price, when kind of that selling power momentum weakens.
So I almost feel like I disrespected the king, Warren Buffett. We're 44 minutes in, and we're just getting now to probably the biggest news that happened over the weekend. But Warren Buffett, in the Berkshire shareholder meeting, announced he is going to be retiring effective January 1st, 2026. Greg Abel will take over as CEO of Berkshire Hathaway, who I looked up is 62 years old already. So his successor, I don't know how long he's going to be around at Berkshire, but just a reaction to Buffett's career, his legacy, and what you foresee Berkshire beyond Buffett, if they're going to be able to keep up the success that he gave them.
Yeah, I mean, I think 6% down is a good day considering like his legendary status. I mean, typically when like legendary CEOs retire, like no matter how like good their replacement is, the market likes known quantities, right? And I mean, personally, like I'd bet on whoever Buffett is is putting in. I like, I'd say it's fair to trust his judgment that much. And also it's like there's no way. It's kind of like when Bezos left as the CEO. Like there's no way that Buffett isn't going to run Berkshire until the day he dies. Same with, but it's more just like it's kind of like I think when you have like, a general manager, right? Where it's just like, okay, like they're running all the day to day, but you're never too far away from a phone call from, the owner to just be like, WTF. So I think in some ways, um, it's kind of funny when that happens because I don't think in terms of the decisions. I think until he's dead or until he like completely loses his mind, it's still Buffett, making the decisions. But who knows? I mean, he just lives. He eats, sleeps, and breathes this stuff, right? Like that was like one of the like, and I'm paraphrasing, and it's not probably like I watched a documentary on Buffett, but my understanding of the relationship with his wife, which really deteriorated, was that her expectation was, I think, he would, as he got more successful, more comfortable, everything, like want to enjoy that more, and that's what she wanted, and he just wanted to work. Which is just, some people love what they do, and that's great. But yeah, it's, I don't know. I'm just kind of thinking about this. I was like, who kind of emerges as like that guy? Um, I mean, like Ray Dalio to a certain extent is like that, but he doesn't necessarily speak as much publicly, and he's already kind of like retired too. Like, I don't know. I don't really know who the next, and maybe we have to see it. Sorry, next guy, maybe next gal. But there's still like it's a lot of underrepresentation in that department. Um, I don't know who it is. I think
Yeah,
it's gonna. Sorry, go ahead.
a couple names I could pop up into my mind, like Bill Ackman. If it's a gal, Kathy Wood. I feel like the All In podcast is starting to really take that kind of finance leadership, like Chamath, Palihapitiya. I could see, but I don't know if you even think of any other names, maybe. You know what this debate kind of makes me think of? It's like I heard a lot of the sports shows talking about like who's going to be the face of the NBA after LeBron, and that's kind of like what Buffett is to the stock market and finance. It's like who's going to be the face of maybe Michael Saylor. How about that? That's a name that just popped in my mind.
Yeah, I
Anyone
mean, the
else come to your
funny,
mind?
I don't think he's enough of a generalist. But I think the funny thing about Ackman, I've actually had two different people in the last few months like point out that his returns aren't that good, and he's more of a talking head. And that's like one of the things, like Buffett. Like I think it's like the oh, I think this is the next. I'm teasing the next Buffett story on the returns. I'll wait for that. Um, but yeah, I think it's like I think it starts, if you want the formula of why I think like Buffett is so successful, it starts with like the scoreboard, right? There's nothing more important. One of the things that I always say about finance is that like and working in a corporate job in finance, I actually was like, I will get like I do think there's more of a meritocracy in finance than I see in a lot of other industries, just because you have that. At the end of the day, you have those results, right? You have that scoreboard, how well your portfolio is doing. And that's like that's like a number that no one can argue with. Um, that doesn't exist as much. I mean, the closest thing would be like sales numbers, right? But like not every job is sales. Uh, but like I think you have that, and then I think you kind of have um his like unwavering commitment to his own opinions, right? He doesn't care what anybody else is saying. Uh he's Other people are not impacting his opinion. He's got like a strong opinion formation. And then I think like, one of the things that I always recommend to new investors is reading his letters to the shareholder, right? Because he actually just like lays it all out for you exactly how he's, formed his opinions, how he does things. And that's a really interesting thing. And he's very good at explaining that in simple terms, in ways that people can understand. So I think it really, you need those three components to really, be Buffett. And I think like, a lot of the people like right there, of the people you just named, performance, I think Ackman and Kathy Wood get dinged a little bit. But then I think all three of them, and I mean, I don't follow Ackman and Kathy Wood enough. I follow Michael Saylor enough to know that he doesn't really do this. I mean, partly because it's just like it's Bitcoin, it's harder to explain. Like, I don't think they really explain their process that clearly and precisely. And I think the biggest reason for that is I don't think anyone has as clear of a process as Buffett. I think a lot of people are more like, kind of putting their finger to the wind. Whereas, like, a little bit, like everybody that does investments is data driven to some extent. But yeah, when I do things for Prospero, I always think about that. And, it's even hard. I mean, for people that read the letters, like, obviously there are things that ultimately are a little bit more of a judgment call. But even like we're talking about, where I put everything in the table on the screener and I try to be like, okay, well, this stock might have been ranked higher than this one, but I was trying to diversify or emphasize. And I think that that's, very, very important. And I think that's one of the reasons he's kind of like maybe like a throwback or like such a unique person. Like, because I think a lot of people that have success now don't feel like they owe anybody an explanation. And also, I think people are like tighter lipped with their secret sauce and that kind of thing. Whereas he's just like so confident in his ability to do it that he doesn't mind laying it all out there for everybody.
And there's one person who I forgot to mention, the legendary Roaring Kitty. No, I'm just joking. But I did want to share this stat about Buffett because it's pretty insane. So it was shared by a large Twitter account, the Long Investor. So I got the stats from him. But so Buffett compounded 19.8% annually from 1965 to 2023, meaning if you had invested $1,000 in 1965, it'd be worth over $40 million by 2023. I think you said as much as 46 million going through today. So, oh my gosh, just insane returns. And the ability to do it over 4 decades, or 6 decades, just shows you that it's not luck.
Yeah. Yeah. It's crazy. Um, I think that, um, I mean, the thing that I think about with that is, I mean, it's just it's the consistency. And even if you like look at what happened in this downturn, where he had gone to cash like a long time before, like I think it was like this summer when started to like really see stories about like, oh, Buffett had so much cash. Like, he just, like, if you want to talk about what we were talking about earlier, which is just like avoiding risk, managing risk, he's the master of that. And it's just, I mean, he does it in a few ways. One, he just makes sure he's getting businesses that generate cash that he can get at a good price. So you're kind of raising the floor of your investments there. And then, yeah, I think I don't think he knew exactly how things would play out with these tariffs and everything. I mean, if he did, that's crazy. But I do think he probably looked at the election and said that there's too much risk in there, and that yeah, I mean, I think maybe another the market obviously reacted well to Trump over Biden. There was a lot of perception that if Biden got reelected, it would not be good for the market. Like, people were playing up that, but then obviously what's happened with Trump is pretty bad too. So I think that he was probably looking at that, and I think anytime you see a potential risk, it's kind of like what I was talking about with like VRT last week. It's just like, you see risk, get out, don't regret it. And I think he's very, very good at that. And I think the other thing is that obviously he's and we've talked about this many times. He's in these investments. He's helping the companies. Like, so that's another way he stacks the deck in his favor. And it's actually incredible. I saw online, I saw that same stat that I actually saw it at like as like 46.9 million X percent. And then the S&P 500 over that same time, just 39,000%. But even that number is staggering. And I think what I always tell people that, obviously I advocate for, good risk management, building your skills in in an organized way where you're making sure that you're ready to take the next step from like, long only to long only hedged by inverse indexes to long short, to options. Like those are the steps that you have to take. And I do not think you should ever skip a step. And I also think you should be at least 6 months of making real money on each step before you go to the next step up in complexity. That's all to say. I always find it funny when you like I'm talking to people online who like sometimes they're older and they're just like, oh, like because I'm advocating for diversity, being able to have different tools in your toolkit, like always. But I think the funny thing that I'm always looking at is people online being like, my portfolio is up like 300% since 1980. Like that's how good, that's how good my buy and hold, my investing strategy is. And like, they don't even realize that the S&P 500 compounded like crushes their portfolio. They're just like, well, my portfolio went up. I'm really smart. But you always have to benchmark. But that's all to say that I think some people don't realize like how much potential they can have to do better by growing their skills and kind of doing what we always advocate, which is like being sensitive to market turns. Like I think that saying of like timing the market, like I think that saying of like time in the market is better than timing the market, I think it's bullshit. Like, I think that yes, if you have very little time to to monitor the markets, to educate yourself, yes, I think that's true. But if you actually invest in, moving your skills up, like even a tactic I use all the time that it's just like if I see, the days start out green, especially if we're more unstable. This is a little too topsy turvy, so I don't do this as much, but I definitely do it. If I see the days start out green, buying some stocks like on the long side or reverse for the red. Like even just using those little indicators and just being like, okay, I'm going to do it today, but I want to evaluate at the end of the day, like how much I want to stay with this portfolio construction. Look at things like net option sentiment. Like I just don't like. I think people are leaving a lot on the table in terms of that. But I think what I'm saying as well is like it also really matters how much time you have for it. Yeah, like you shouldn't buy, an extra, few longs on a Monday morning if you don't really think you're going to be able to reevaluate until Thursday, right? And I think being honest with yourself about that is super important. But yeah, I think I think that um I think that being able to use something like net option sentiment, that's why we invented it, right? Because I want to be able to take a quick look at the end of the day and say like, okay, net option sentiment started the day at 43 and I like that. And now it's at 47. I'm comfortable staying with this portfolio construction. Or the reverse is like it was at 43, it ended at 32. Time to take my gains and go back to a more neutral portfolio.
So I saw another stat over the weekend that blew my brain almost as much as the Buffett performance stat. So Take-Two announced that they're going to be delaying GTA 6 again. It was expected to be coming out at the end of this year. Now the tentative date is May 2026, so a year from now. And someone was posting about how GTA 6 has now taken longer and more money to develop than the Burj Khalifa, the biggest building in the world in Dubai, took. So the Burj Khalifa was built in 6 years and cost 1.5 billion, and GTA 6 has been in development for 13 years and reportedly cost $2 billion. So pretty funny there, but Take-Two stock had been very strong recently, even with the volatility because of GTA. So I'm wondering now that it's delayed if it's going to be able to, if investors are going to be able to wait another, 7, 8 months for it to come out, they're still as excited. But what do you think about that stat too? I feel like it's kind of when you put it like that, it's pretty insane to think about.
Yeah, it's kind of it's staggering and like it just all it makes me think is that some executives just like are so irresponsible in their spending, and they don't realize, right? When you're building a building, right, you're gonna, you have a much more reliable, especially if you're selling units right away, a much more like reliable way to like get your money back quickly, right? But I mean, how much did the last GTA make? Like, is it like a loss leader? Like GTA 5, much revenue did
I
it
think
make?
it's actually like a cash cow, the last one.
Oh yeah, wow. I didn't realize that. Okay. Oh, are there like in-game purchases in these things now? Is that what's going on?
It's because GTA kind of has their own type of like metaverse, almost type of Sims thing, where people create these like communities and like almost like lobbies, and they just live digital worlds in there and go crazy. So they like
Wow.
constantly, I think, monetize it through that.
Yeah, I had no idea um that it did this well. I thought it was like, when I heard that number, I was like, oh, like that's got to be like a prestige project that they're just like building the brand with. But no, that's crazy. Like, actually, that's, now my opinion is completely changed on this. Like, when a game makes that much money, you're almost obligated to like, because like, look at it this way, we always talk about like headline risk. For those that don't know what headline risk is, that is basically, when a CEO has to face their shareholders, like, and basically be like, I made this decision for XYZ reason. You're always worried about headline risk, right? Because the idea is, if you if it's even more embarrassing for you to like explain what you did and why you were wrong, like, people will avoid that, even if they think it's a relatively good idea, right? Like, I think the perfect example is like Zuckerberg in the metaverse, right? If you burn through a bunch of investor cash on something that's like a pretty speculative R&D project and it doesn't hit, like, that's hard to explain, and that's why their stock got tanked, right? That was a bad headline risk management, right? So what am I talking about in relation to this? Let's say, like, GTA 5, they spent $1 billion on it and it made 9 billion, right? Now let's say you spend 800 million on GTA 6, and it only makes 5 billion, and everybody's like, well, why were you spending less on GTA 6 than you spent on GTA 5 when it went so well? So yeah, sometimes you're just like spending, so you're avoiding that headline risk conversation, right? Because if it ultimately flops and people are just like, you could stand up there and be like, I don't know what you like. We spent $2 billion on it. We spent twice as much as we did on the last game. Like, you did we make some bad choices? Yes, but like, that's a very interesting thing about headline risk, right? Like, there's certain kinds of things that are worse than others. And yes, spending more money, like, if a game ultimately flops, is better than looking like you were cheap about your flagship game and then it flopped. So that's one of the many weird, and like, that's one of the many weird parts of headline risk, that you follow this for long enough and you read enough conference calls, and like, yeah, like, and these executives probably had to spend at least that much money, so they didn't have to later get up if there was issues with the game and say that, like, well, we were cutting corners or spending less than the last game. Better to spend more.
I would imagine, I mean, I don't know for sure, but that AI will help like the speed of gaming development a lot. And that, if there's a GTA 7, maybe it could be done in 2, 3 years versus a decade plus like the past one. Just because, it's funny, since it's been developed for 13 years, they were kind of developing it like, I guess, a little bit pre AI, and maybe they're using some more of it now as it's kind of, I mean, I'm just theorizing, but it feels like 13 years ago, there was probably not too much AI around, right?
Yeah. Yeah, I mean, definitely. Although I am I am writing an article right now on like labor markets and AI and chat GPT, um like they're $20,000 agents. And I actually realized a very interesting parallel with the car industry. And like, yeah, like I mean, not like AI as it's considered today, but automation that the Japanese used helped them, take over the car industry. So I mean, it's kind of like AI is like it's almost very specifically like LLMs now, but like I actually consider like a lot of different things uh to be AI. Like just I mean, for me, AI is just like a computer that is reasoning or doing something similar to what humans do and doing it better because they have some kind of extra, capacity to like manage data. So yeah, I think like an automated car factory, right, is a good example of like, yeah, I would like it depends on how automated it is. But yeah, if you're talking about something that like, yeah, a person couldn't sit there and like move all the levers and do everything, like that would be impossible. So you're basically having a more intelligent operating system by a robot. So yeah, like that is to say, I'm sure prior GTA games had like versions of AI that were like looking for bugs, for example, right? Like I don't know when and the extent of how it transferred, but like yeah, just like code trying to run itself and searching for errors. I'm sure they've been doing, and I would consider that AI, but it's not like a it's not generative, right? I'm sure now, like before you had to like before you basically had to render the whole world and figure out like all the simulations and what happened. But I would not be surprised if to save money and also have a more expansive universe, now they're using generative AI to do that, to generate things on the fly. Now I don't really know that for sure because even just using this example, right? When you're running simulations and rendering your whole universe, you know exactly what the bugs you know exactly what bugs appeared and how to fix them. If you're rendering things on the fly, like could be buggier. I don't know how it really works in the gaming world well enough. Just like theoretically, like not checking something, or sorry, theoretically checking something and running kind of every simulation and making sure the bugs are known. Theoretically, that is a better way to do it than something that is newer, rendering things on the fly. I mean, because the big thing that is probably a lot harder to figure out if you're rendering something that you've never rendered before, maybe for more users or whatever simultaneously. um I'd say compute is probably the bigger problem there, but you can always like kind of overkill with the compute. I mean, I don't necessarily think there'd be any more bugs, but I just like I'm more comfortable in known problems with known solutions than we're going to build it on the fly and we have a lot of robust defense mechanisms for that. I don't think that's as strong as knowing all your bugs.
I swear I thought you were going to say I'm more comfortable living in this simulation that we're living in now at the end of that because of that. You've probably heard of the simulation theory before, but we're going long, and I do want to ask you about one more topic before we switch over. NVIDIA rumored to be considering adding Bitcoin to its balance sheet. I couldn't find a reliable source for like that this came from NVIDIA, but there's a lot of big accounts posting about it. Do you think this could have been leaked and NVIDIA is testing the waters? And then how do you think it will affect NVIDIA and Bitcoin if it actually is true?
So I mean, first of all, like I don't know how much cash Nvidia has on its books, but given their profits, I'm sure it's a lot. Um, it's just like a different cash reserve, right? Some companies make investments, some just keep it in cash. It really depends. Like there's all different ends of the spectrum. But I think it's just a reflection of people viewing it as like a currency that potentially has more appreciation potential than just like sitting on cash, right? There's risks to it too. But we always talk about like Jensen Huang's very good at managing like the public perception and everything around the company. He has to notice the way that like GameStop talking about buying Bitcoin. Like he's got to notice what that does to the stock price. And that's like that's always the interesting relationship between, risk and investment and everything else, right? If it's going to help your stock price, add more value to your company, make it, essentially cheaper for you to raise capital, or, incentivize your employees, blah, 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 whatever, then that negates the downside risk of actually owning the security for sure. But I think we're probably going to see a lot more of this. And at the same time, a business like Nvidia, we talked about in relation to, GameStop, how that being kind of their best idea for the business is not a very good reflection of the business. But if we kind of see that jump in the price around that, that's definitely something that that I think is more unique to that, right? I don't think, because Nvidia doesn't need the Bitcoin appreciation as much as, perhaps the perception around GameStop. I actually think that also means it wouldn't move the stock as much. But this is a very easy answer to know how Jensen Huang thinks about this. If they buy it and there's a press release around it, that means that he's trying to leverage the story, right? Because you're not obligated to release a press release when you spend your cash to buy Bitcoin or whatever, right? So if he buys quietly, it means he's just interested in the board is just interested in the price appreciation. But if he buys and there's a press release around it, it very succinctly means that he thinks it'll help the announcement will help the stock price, and almost inherently that's part of the reason he bought.
Well, we've had over 2,000 people tune in. I hope you enjoyed all the topics we've covered so far. I think we're ready to go ahead and do the switch over right now to the model portfolio.
Yes, and we'd also, as Stephen sometimes says, we forgot, if you enjoyed this, I think a lot of you are more on X, give it a like, give it a retweet. I think this was a particularly good session. So yeah, let other people see it.
Yeah, thank you guys. All right, we're going to do the switch over. George will tune right back in. Stick around with me for the moment. He's going to come back in and we will do the model portfolio update. Let me make it full screen here. All right, Nicole said, thank you guys. You're welcome, Nicole. Thanks for tuning in. Hopefully you guys all enjoyed the topics we covered today. I think that Warren Buffett segment was really good. I'll probably clip that whole thing and post it as a video on our channel to honor Buffett going forward. But let me take a peek back at the SPY QQQ today as we've been streaming to see if there's any moves in the overall markets. So QQQ, SPY still in the red, Russell still in the red. Dow Jones is also green on the day. So nothing really changed since we started streaming. A little bit higher in the overall markets, but not much volatility today. Let's see how the SPY and the QQQ did in the net option sentiment in the meantime as well. It seemed like things were a little bit jumpy in the QQQ net option sentiment. George said he saw it as low as 25, I believe, earlier today. So let's check back in. All right, so I'm looking at the SPY right now. The SPY is at 46 in net option sentiment. So if you're someone who's newer to the signals, our bull level for the SPY and the QQQ and net option sentiment is 40. So the SPY is still sitting above that. Take a look back at the QQQ right now. QQQ is at 41. So teetering right on the bull line, be it a difficult choice for George today to decide what he's doing. Let's see how our likes are doing on YouTube. Do we hit double digits already? Let's see. All right, I see 11 likes. Thank you all in YouTube. As always, yes, like George said, please like, share the stream with people if you enjoy it. We love doing these for you guys. George is back with us now. George, we peaked at SPY and QQQ. Not much change in them. SPY 46, QQQ 41. So just kind of hanging out right above the bull line for both of them. It seems like a little bit lower volatility than in the markets too. Like they're drifting a bit higher, but not much has changed since we've been live in the beginning of the stream.
Yeah. Let me. What am I doing? I gotta get the tunnel open so we can grab the data. That's what I was doing. All right. Curious, it seems like there's some Palantir people in here. Are people holding through earnings?
I feel like the Palantir people are, I don't want to offend anybody, I'm sorry, but they're like one of those cult stocks. So I feel like that question is kind of like a no-brainer for a lot of them. It's like, yes.
No, I agree, but I always like to hear. I agree. Like I feel like when we talk about like Meta, it's like different. I think people that own Meta overall, I feel like are a little more
Yeah, I don't know. It's like Tesla, GME, Palantir. I don't know what about these companies, but there's something about some of them that they just get so they get the investors so excited behind like the story, and then they just ride or die. I feel like.
AMC.
I guess it's
Like
games.
there's still AMC people coming to comment on like our 2-year-old video about
I
like,
know.
and it's like always just like it's so funny. It's like I don't know if like it kind of makes me think they're bots because it's always just like thanks buying more. Like it's always
I
the
don't
same.
understand it. I'll check in on AMC stock, see how it's doing. Like it's down like 60, 70% since we posted. And it's like these people are taking victory laps
No, I
on a,
know it's absolutely insane. It's like,
yeah,
have you not seen what's happened with the stock? It's
I
like
know.
it's like the same thing about like I feel like it's the same like the expression about Americans, like everybody's like a millionaire that hasn't made their millions yet. It's like I feel like it's the same thing. Like
Hmm.
they're just like they view it as like any day now the short squeeze is coming. Like not that it hasn't come for like 5 years.
Yeah.
Okay, I gotta focus on this.
Large cap growth has been passed by small cap on the 1 week, which is interesting. We'll definitely look for some small cap targets long as a result.
Okay.
Energy and consumer discretionary are the clear bears. Industrials really stands out on the 1 week, as does communications.
I don't think that's how you spell parents. Why didn't it spell check me? Oh, is there no spell check on this? Oh God, I probably have been misspelling words left and right. Okay, now I need. Okay, I need that. All right, so we have 41 there. I could have sworn Hog was. Already done. 32. Are Amazon and GME a win?
Amazon, yes. GME, no.
Can you tell me what GME net option sentiment is? Can you go and look at that the graph,
Yep.
like the time series?
Currently at 90, and it's been actually very stable between like 87 and 92.
All right. We'll keep that one for now. Where is...
Downside is starting to increase. I don't know if that matters. It was like 8 throughout the time series. Now it's up to 24. Still kind of low.
I mean, I think hold out a little longer for the win, or if it goes below on momentum score, we'll give it another day.
Interesting seeing Baba on there. I'm seeing some stuff on social media, getting excited for them again.
Oh, really?
Yeah.
Do we have any open Baba positions right now?
Looking. We have none. No open.
CAH. Do we have any open deck positions in right now? Steven?
Yeah, looking, loading.
Oh,
My computer's slowing.
I
It's
didn't know
good for
you
3 or 4 searches.
Oh, I need to get.
I'm gonna see if I can start looking for. Is there a way to control search on a phone? Because I have the Sheets app. It'd be so much easier if I could look on my phone.
I can do this just way faster. Oh, I definitely have to get out of some of these. I gotta get out of some of these.
No deck.
Yeah, no deck. I figured that out. KTB. I don't think I want a small cap consumer cyclical, but I'm gonna go shopping. Oh, FRWD. A small cap industrials. I'm forward air. Oh, I like that. Oh, that's good. Yeah. Let's get that. Okay.
Looked like the market might not keep its 9-day win streak alive this morning, but it turned that around pretty fast.
Okay. This was a marathon. Any questions?
No questions in the chat right now. Yes, thank you
Oh,
guys for
wait.
sticking around our 90-minute
I'm
stream.
going to take a look. Might as well take a look at my positions before I sign off, because I have to do that one way or the other. That is looking, AXP looking a little weak, but nothing I'm really going to do anything about. Oh, Juniper. nothing to do there. All right, getting out of here. Thanks, everybody.
Thanks, Jordan. Thanks, chat. We'll see you again Wednesday, 3 p.m. Bye, everyone. Happy Cinco de Mayo.